that basically describes Bitcoin. And basically what Bitcoin is it's just a bunch of computers coming together to verify one ledger using encryption techniques that make it so that anybody on the planet can have a full ledger of everything that happened with Bitcoin. Right now, if you were to download the Bitcoin blockchain, you'd be downloading every transaction throughout history. So it's pretty big, as you can imagine. It's up to 30 gigabytes?
Over 100 gigabytes.
Oh, over 100. Okay, but first we'll go into history and just learn a little bit of financial history. Starts off with barter. Obviously, it's pretty simple. I have something you want, you have something I want, we trade. Very simple. But to have complex societies, I might not always have what you want, and you might have something I want. So we came up with the gold and silver banks, or gold and silver standard. This limits the amount of supply of a currency so that we can then trade without having to worry whether you want my product or not, because I can buy your product with gold and then just sell my product with gold and use that as an intermediary if you don't like what I have to sell or offer. Then it went to fiat banks. Hope nobody here works for the banks, so I'm going to be bashing them a little hard. Fiat basically means that it means let it be so. So all this money is just there because people believe it. It could literally crash tomorrow if people stop believing in it. And same with Bitcoin, but the thing with Bitcoin is it's actually one of the best banking infrastructures on the face of this planet at the current point in time. So it's based on the same principles, but the difference is what people have belief in. And another thing you got to really think of is supply. Fiat banks with the Federal Reserve are printing God knows how much money. Okay.
The Federal Reserve does not.
All right. Well,
they don't.
They do a lot of different financial tricks with the government, and they lend money to the government, and the government paints bonds. I know how it works, but basically they're printing money. What's QE? What's a quantitative easing?
Quantitative easing is exchange of one asset for another asset. It's not changing the market.
They increase the monetary supply to do that, did they not?
Yes, they do.
That is printing money.
But it's not. They're not printing the money.
Okay, well, it's increasing the supply. Sorry, I'll reword. Yeah, sorry. It's all about supply and demand. They increased the supply. I won't say they printed money. They increased the supply. Nobody can deny that. When you increase the supply, that artificially brings down the demand. So it's just bad to have. And Bitcoin, there's only ever going to be 21 million Bitcoins, which is why. Do you want to say something else to that?
No, I'm not going to say that.
Okay, because inflation has historically been bad. But getting back to it, Bitcoin only going to be 21 million. Fiat banks, they're increasing the supply millions of dollars every day, basically. So that's a quick financial history and why Bitcoin is soon to take over. And it started off at pennies, now is at $4,800 some dollars. Here's just a quick overview of Bitcoin blockchain technology. It started in 2008 after the last financial crisis that almost brought down the system. People don't know about that. There are a lot of brave souls that did what they could to provide the liquidity so the systems wouldn't come to a crashing halt. Then just what I'm talking about, immutable ledger, basically all these different computers all around the world, they come together to make one ledger that's unified so that nobody can cheat. There's no corruption. It's all math. It's encrypted, stored on multiple computers, and transact anywhere online, which means it's actually, once people start accepting Bitcoin, even more fungible, really, than cash, I would say. And then here's just a quick overview of my company that I made. It's GNEISS. It stands for, question?
Yeah, so where does that FDIC fit?
The FDIC? Well, my company's in Singapore, so I don't really deal with the FDIC too much. But and they're all trying to regulate it in a different way. There's different branches of the government that are saying Bitcoin's a commodity, others that are saying it's a money. They all try to rope it in with their jurisdiction so that they can say how it's regulated. But truth is, nobody really knows how it's regulated because there's no, like, actually in the books definition of how it should be regulated or any laws.
Who decided that there's 121 million Bitcoin could they change their mind?
That's in the map. That's in the program itself. All these different computers that come together have the full software. It's open source software. Anybody can join. Anybody can see the blockchain. So they,
So if somebody goes in and has another.
well, then that's the one computer out of the 6,000 that's going to get rejected. Because all these computers are coming together to cross-verify each other in real time. So if one computer says, hey, the ledger's this and it's not, or they're trying to hack the network, they would have to take down every single computer, basically, in order to do it. And it really gets into the semantics because nerds like me could see which blockchain is the authentic one, but it's near impossible now, especially if you're going to compare it to the current financial banking system. Question? And then GNEISS, my app uses Bitcoin as our dollar and Ethereum kind of as our gas. Ethereum is similar to Bitcoin. It came out a little bit later. The main difference between Bitcoin and Ethereum is Turing complete, basically meaning that it can run what are called smart contracts. A smart contract is where you program something into the blockchain and you know that it'll execute at a certain date under certain conditions, and you don't have to trust anybody else to make sure that it does that. In real life, if I'm doing business with somebody, I would have to trust that supplier comes through or something like that. With smart contracts, it's all there, it's all open, it all automatically executes using blockchain technology. And GNEISS, using Bitcoin and Ethereum, we don't even use the dollar, but it allows for peer-to-peer banking. Right now, you can trade like 7 of the biggest fiat currencies on the planet. I created markets for them. And the sky's the limit there. Anybody tomorrow could go on my website and create coins that represent Apple stock. They could represent mortgages. They could do whatever. It basically decentralizes the power of Wall Street so that one person can do any financial contract that Wall Street can. And then this creates the trustless economy because what we can do is in these smart contracts, we can hold collateral in the actual blockchain itself. So let's say I'm a gold bullion dealer and I want to sell gold to some investor in China. I could log online, say I have 1,000 gold coins. So I make 1,000 gold coins on this platform, back it up with the amount of Bitcoin or any other equivalent asset that has that value. So then, in essence, you wouldn't need to know whether I had the gold or silver or not because I have the monetary collateral in crypto assets to equal that out. And let's say I'm collateralized 100%. That means that if it breaches that 100% level, then everything gets forced liquidated, the investors get back their money, and then they can reinvest in somebody else. So in essence, theoretically, I mean, granted, time lapses in seconds and markets mean a big difference, but theoretically, investors couldn't lose their money as long as they invested in 100% secure collateralized tokens, which creates what I call the trustless economy. So that way, you can basically at all times see the collateral any one person has for their bank, and eventually there'll be rating systems, and there'll be a lot of other cool features that will separate the good bankers from the bad bankers, the guys who actually provide a good service to the economy and to everybody as a whole. So that's basically that overview. Let's go to PowerPoint. Turn that back on a bit. All right, well, any questions while this is warming up? Yes. It can be used for a lot of different things. That's a great question. Eventually, I want to also incorporate logistics platforms into my platform. That's actually the next feature we're about to make, a location-based feature. So you can see where the transactions happened. Using that, you could actually effectively price entire logistical components of businesses, because obviously the product that's made right at the manufacturer is going to cost less than if you have to ship it 1,000 miles away. So it can be used for logistics and a lot of other cool legal purposes that right now lawyers are a part of, but this could automate.
I've seen some stores, major stores, I forget, like Target or something like that, that accepted Bitcoin online to buy stuff.
Awesome. Yeah, it's already starting.
Yeah.
Just wait. It's
And
It hasn't even
don't
really
quote me on
started.
Target, but it was something recently when
Overstock.
major.
too.
Amazon.
Yeah, Amazon.
And
It was
Amazon
Amazon
takes-
that took it. Yeah.
This is secured by encryption, and I've seen a lot of articles recently about the vulnerability of encryption to quantum computing. Do you have any comments?
Good question. They are working that out right now. I could maybe leave that to my CTO. He'd probably answer best. But what I can say is that they are working on it, and the same encryption techniques that are used for Bitcoin also are used for the banks. So they're already on the same encryption standard.
Right.
But, 100 years.
If you use the most recent version of Bitcoin addresses, it is quantum computing safe, and Ethereum is working on making something that is safe.
So, I've heard some stories that, I'm sure you're familiar with like deep web and, how it's not very traceable. And I've heard about there's lots of drug trade that is using Bitcoin. You know how I don't know if you know this, but you know how they might be able to combat that, to stop that? Or?
They can. To be honest, more drug trades probably done in the dollar than Bitcoin, even at this point. But even that, they couldn't combat it with the dollar. They could theoretically, with Bitcoin, see the IP addresses if they're not on the dark web and they don't know how to protect themselves. But even at that, there's still other cryptocurrencies that are more anonymous than Bitcoin that have already come out, like Monero and other coins that would be pretty much impossible to track if you.
But there's
had
also
it.
coin washers and
Yeah.
Bitcoin laundromats in a way.
Yeah.
Where you're basically taking one currency and moving it to different, moving it back, and you lose a little bit of value in between to the launder. But
To be honest, comment on that note. I'm an extreme
Yes.
libertarian, anyways. I believe as long as you don't hurt anybody or anybody's property, which is common law, there shouldn't be a crime, or there isn't if you know law. But
Yeah, our whole tax system works on the basis that the government can go in and seize your money.
Illegally, yeah. We can get into law too if you
That's the
want.
reality of what happens.
I haven't paid
Can
income
they
tax.
do that through with bitcoins? I mean, how would they ever be able? Because it's not an account number. It's sort of like switchover.
Yeah.
So they really can't see what's going on with your stuff in there.
If they got your wallet, they could see all the transactions. Bitcoin actually is a lot more traceable than people like to think. They could see everything, they just can't take it without your private keys.
Okay, so they could still establish that you have that income.
They could. Yeah.
Okay.
So, and this will even automate it all, so that it'll be easier for them to audit people. Yeah, I'm fighting on the legal aspect too. Believe me, this is the financial battle I'm fighting pro stuff. But okay, so this is up. So Bitcoin blockchain technology. Our motto for GNEISS is reinventing the financial wheel. And then this is just a quick overview of what happens when A wants to send money to B. The transaction is represented online as a block. These blocks have a certain amount of transactions in them. Right now, the limit is 1 megabyte per block. The block is broadcast to the entire party in the network. Then those in the network approve the transaction is valid through that big process you saw of guest checking numbers. And then the block is then added to the blockchain. And this is where the hack would happen, if at all. But all these other computers are coming together to verify the same blockchain. So by doing that, then you can successfully move money A to B. And this is just talking more about Bitcoin. And a quick note of central banks. Our founding fathers specifically warned against central banks because they knew the corruption that could happen with central banks. I'm sure everybody here has heard, he who owns the gold rules. That is not because he who has the most money rules. It's he who owns the most gold that can manipulate the market's rules. Throughout history, that has been the case. An economic lesson they won't teach you in school. And the problem, trust is needed in order to do business. Right now, we have a clearinghouse with just one central bank. Central banks have a single point of failure. Let's even say they're not corrupt. There's still one point of failure for hacking, one point of failure for theft. And you could say, well, Bitcoin's one thing, but it's one thing stored on 6,000 some computers.
I'm curious question.
Yeah.
How secure, I mean, because you've heard of, at least in the past, there's like Mount God
Yeah.
disappeared.
Yeah.
300,000 Bitcoin, whatever.
That's an exchange.
Right. But what is an exchange compared to, what is NEISS?
That's a good question. NEISS is an exchange. You would be trusting me with your Bitcoin as of right now. We have plans to decentralize and then people store their own keys. That's why a common phrase you hear amongst the Bitcoin crowd is if you don't hold your private keys, you don't hold Bitcoin. Just like if you buy gold on the stock exchange. Really, the only gold you own is the physical precious metal you have. On the stock exchange, they're so over-leveraged. But basically, Mt. Gox was an exchange.
Right.
If those users had got their Bitcoin off the exchange and then stored it in a private wallet, they would not have been stolen from it.
So what function do the exchange perform?
They still need intermediary to exchange the crypto assets. You could, I mean, technically you don't need an exchange. I could give you Bitcoin just like you could sell it to one of your friends, but there's just kind of just one clearinghouse for settling transactions.
So with Mt. Gox, they just disappeared, right?
Yeah.
They just stopped trading, but and what happened with Bitcoin?
Well, that was people's accounts, but yeah, people lost their Bitcoins in those
So
accounts.
they're gone.
Yeah.
Well, the founder of Mt. Gox actually took them. It was recently found that he took all their Bitcoin because he had all their private keys.
I'm not saying Bitcoin
No.
can't be corrupted.
Okay, that's new. I did not know
Yeah.
they actually
It was recent they found
Okay.
that.
So what happens when, but 21 million, what happens when some of them are just gone?
It can't do that. That's what I'm saying. It didn't affect the Bitcoin blockchain. It only affected that exchange.
But they disappeared, so those Bitcoins are back
They
in the
could see
system
them
now?
on the blockchain, and I don't know how they cleared it once they found out that he had them all, but everyone could still see they were on the blockchain, but they didn't know who owned them.
Okay.
That's the thing. So, like, think of Bitcoin as like digital gold. If you don't have the proper security measures to store your digital gold, it can be stolen. Just like real gold in real life. Anything can potentially be stolen that has anything of value. That's what thieves do.
So
Right.
the wallet, we maintain ourselves
Yes.
in our own control, and if we want to exchange it, we have to find it. We can either do directly to that person by going into the blockchain,
Yeah.
or we go to an exchange and then the exchange does put it in the blockchain.
Yeah. The exchange just basically brings a bunch of people together. It's not like you can't do anything the exchange doesn't provide, but it's just a lot easier to use an exchange.
So how do you get paid?
What do you mean?
Transaction, bringing two people together, you gotta make some money somewhere.
Oh yeah, the exchanges make money. They profit. Like the main exchange I use,
X
it's like
percent, whatever.
the what?
X percent of the transaction?
Yeah, 0.2% is what Poloniex charges. They're the main exchange I use. And let's see. So, current financial landscape hasn't been changed or innovated in decades, and traditional banks have financial incentives not to innovate. That's why they still make money off of Western Union and stuff like that, charging outrageous fees to just transfer money overseas. When Bitcoin costs like maybe 20 cents now, especially with SegWit coming out, it should be free here soon. It's theorized that it'll eventually become free because people want the information. Right now, your debit cards are all profiting off the information you give them based on your transactions. But with Bitcoin, theoretically, it would eventually become free just because of that alone. And the solution, Bitcoin, obviously, blockchain technologies are trustless. What I mean by that is a bunch of computers come together to verify it using math. There is no people involved besides the people that run the computers. Bitcoin's blockchains do not have a single point of failure. The blockchain provides instant access to audit the entire history, which is crazy. I mean, you can see the first Bitcoin transaction if you download the full thing. And provides instant liquidity online. Data is stored on many servers, not just one.
So if you want to mine, you have to download that whole 100. You have to download 10 file.
Yeah. And then you also have to buy specialized computer equipment that's specifically engineered for it. So like, here's another incentive just so people can be worried about Bitcoin not being hacked. Let's say I was the guy that had all this enormous Bitcoin mining power and I could hack the network. it's not my financial incentive to do it, because if I do it, then I lose all my computer power. Then all that just becomes a huge paperweight, and I can't recycle that computer power for anything else.
That type of server that would meet those requirements, is that something that you could lease in a facility? Is that type of thing out there?
Yeah. Well, we're doing it right now with GNEISS. We have our own blockchains, and it's only 100 gigabytes, so it's not well.
Yeah, I'm sure there's certain processing capabilities out there. But that type of thing, I could find a facility and lease a server that would meet those requirements, except on real life.
Yeah, it's very easy, and it eventually will get bigger and bigger, but technology will also get better and better.
You say that server becomes a big deal. That software becomes the core system of that server. Once it gets rejected, all the UIDs on that device are now rejected and will not function at all. Or are you just saying that you're going to be allowed back into the blockchain?
No, I'm saying that the actual machinery equipment becomes useless. If Bitcoin dropped to $0 tomorrow, all the equipment, the billions of dollars that have been invested in it, would be worth nothing, because all they would be able to do is maybe hack SHA-256 encryptions. That would be the only purpose that you could utilize out of that equipment, other than mining Bitcoin.
It's purpose built to be solving those factors.
Yeah, specifically for Bitcoin too. And there are other cryptocurrencies that have different mining algorithms that all have different computer power. I mean, Litecoin does CPU instead of Bitcoin's GPU.
If the Bitcoin is GPU,
Yeah, Litecoin's CPU.
I think it was
No. Bitcoin has the higher hashing power. That's the thing that's the biggest sell. Yeah. Video gamers are really mad at the Bitcoin people right now because they took all their graphic cards. It's pretty funny.
So a quick question, just because I got here late, some of this was kind of hard to grasp onto, since I came in
Yeah,
the
no,
conversation. But so what exactly is mining? So that's where you're basically letting the transactions run through you, or?
So how the transactions happen is that all these mining equipment, they randomly generate a lot of numbers, and this is numbers on a really, really, really big scale. So by using law of average numbers, I think that is something like that, you can basically predict when a certain number will be guessed based on the numbers and variables that you see present. So every time they guess that right, that's what gets the transaction in the blockchain. So they don't actually use time to verify it. They use they use relative dating. So it's similar to how paleontologists date dinosaurs. So the dinosaur down at the bottom, they know is obviously older than the dinosaur at the top. So that's how Bitcoin can operate without time, and that's what makes it so that it can be global, because time is relative to where you are.
So you just make from whichever functions first gets the transaction.
Yeah, and there are a bunch of transactions in the cloud. It's like they just randomly get picked out.
Oh, okay. So what is the benefit from out of running that transaction?
They get a transaction fee and they mine Bitcoin. So right now there's 16 million some Bitcoin. It's going to cap off at 21 million, and it's going to look like an S curve towards the top. So eventually there won't be any more Bitcoin, but the miners will just be paid off the transaction fees.
So I think I understand. So basically, it's just like any other credit card company where you're just running. And actually, my dad works in London. He's a virtual guy, and they have a business where they process credit cards.
Yeah.
Going and my sister's fiance, ATM. So basically, it's just that, but it's all digital.
Yeah, all digital, and everybody agreeing on one ledger.
Okay. Yeah, that makes sense.
How many transactions are they doing about?
I know they can only handle 2 to 3 a second, and Visa's like up to 100,000 a second. But with SegWit, segregated witness basically removes a side of the blockchain so that people can process transactions over here really quickly, and then it can merge back into the blockchain. So by doing that, because obviously there's a restraint on the blockchain. You can only fit so many transactions in that block. So if everybody tries to pile in, send a transaction at once, it's going to send those transaction fees soaring. So the SegWit was segregated witness, and what it meant to do was just make it so you can have instant transactions off the blockchain and then synchronize it with the blockchain. You would obviously have to trust that SegWit provider, but it's still a way that you can have instant transactions rather than Bitcoins that taps out at like 2 to 3 transactions a second. I don't know, how many do you know per day?
I don't.
I know per second.
But
per second.
are they general? I mean, are the transactions that high right now? Are you getting?
They're getting
Oh, yeah.
there. And that's why recently integrated SegWit into Bitcoin so they can handle the rising amount of transactions.
Which worked phenomenally. It reduced the fees, and now you can trade relatively easy.
Now, when you say trade, are you just talking about the buying of Bitcoin or using Bitcoins to buy goods and services?
Both, in a way. If you're on an exchange, trade would mean just that exchange would hold your private keys of Bitcoin or whatever, and you could buy different coins with them. But trade, I also talk about like peer-to-peer. If I send you Bitcoin, there's a transaction.
Right. So if I go to
Before
Amazon and buy something with Bitcoin, how does that transaction fit into? Is that just one of would that just be one into the chain?
Yes.
So every time Amazon somebody uses Bitcoins on Amazon, 25 coins are being Bitcoins are being part of the mining once it's solved, right? Is that
It just updates your balance. So if
right? But I'm saying, but whoever gets that into the chain gets the coin, gets coins for right. That's how you mine, right? You know what I'm saying?
Yeah,
But
but you-
basically, if you solve the equation, get it into the chain, you get Bitcoin.
yes, in my
Right.
Bitcoin wallet. Yeah.
Right. Is Amazon doing those, or it's just random who gets that transaction solved, right?
Yeah, it's just random who gets every transaction is random.
Right, right. I'm just wondering if there's a way that the companies are. If I buy something for 1 Bitcoin and they get to process the transaction and one fees for that.
They don't actually process the transaction unless they're running miners. And you have to have the specific computers for it.
Right, it's random. Yeah, that's fine.
But it's
That's-
possible Amazon isn't even running any miners. They don't.
So literally, like, just if you have the right computer, is my first question. If you have the right computer, anyone can be a miner, or is there
Yep.
specific? Yeah.
You don't even need a specialized equipment computer to do it. It's just the electricity cost wouldn't be worth it.
So it's just process. It just takes no power.
Yeah. I mean, you can do it with any normal computer. It's just it will be really small compared to the over.
So unless you have like
gigantic.
the specific like kind of thing built for that.
Yeah.
Or, okay. And my second question is just curiosity. Like, you said like this could run about like 2 transactions a second, and we see about 100,000. Now, is that dependent on how many miners you have? I would assume. Okay.
That's on the software because there's only 1 megabyte per block,
Right.
so there's a limited amount of transactions you can fit in that block. But SegWit solves that. So theoretically, it could go up to this now, but it just wouldn't be on the blockchain.
And yeah, that was my next question. I think how long theoretically would it take to get to the size where you can run these size transactions?
They wouldn't do it like that. They want to keep the block size at 1 megabyte because that decentralizes it more. The more that you increase the block size, the bigger that file is going to get that's already at 100 gigabytes. And then that would centralize it more towards the companies that can afford that massive amount of data capacity. And
So
stuff
that's
like
like what keeping it compact is what keeps it safe from being hacked.
that. Yes.
Do you know have any major corporations who are running their own miners? People that have more financial power, like MasterCard running data centers full of computers just to try to do mining.
I know the CEO of Overstock. I'm pretty sure he has his own mining rigs and some other people. But right now, it's actually dominated in China because China is like the world manufacturer now. It's really unfair how competitive this is in China because of their laws and not focusing too much on environmental issues. But it will change here soon, I bet, because China can't keep doing what they're doing forever.
And I also know about mining worms and attacks like that. They're botnets doing mining across lots of people's other.
Yeah, there's botnets that will take over your computer that harness your computer's mining power to mine their massive network. You can combine these computers together too. So if I got like every computer in this room, that might equal one like modern blockchain machine or something like that. So that's a hack, and then there's also the other hack of where they hack your computer, encrypt all your files, and then demand Bitcoin.
Yeah, that too. That's another way.
Yeah, those are the two.
I think
most
that makes
popular.
more money faster than mining Bitcoin.
Yeah. Which, I mean, people don't like that, but at the same time, you got to look at it from a security standpoint. That security loophole was there before Bitcoin.
Right.
So this is also going to be a way for people to drastically increase their security, because if they don't, they're going to get hacked easier. Because now there's financial incentive for the hackers to go after it. So it's a way of, I kind of like to think of it as Darwinian evolution in a way.
Yes.
That the strongest survive.
And if you took over all the computers in the room, you wouldn't be paying for electricity.
Yeah. That's the whole hack. It's nerds are clever.
Yeah, I was just going to comment on what you said. I've got to keep my server PCI compliant, and the side benefit of that is that I'm keeping it secure for all the other stuff that we have. Keeping it PCI compliant, that tends to keep it safe.
You say my server, do you have like one server that you need to protect?
One server.
Yeah, we have like 700.
Yeah. Same place.
Or more.
Blockchain technology can help that out too.
I've got some thousands of cores.
Yeah. We have an entire network.
So one thing that I'm wondering about is if you're not someone who wants to be a miner, and you're not someone who's a speculator as an investor, and you just want to have Bitcoin as a currency, you are at risk because there's no insurance.
There's no insurance on life.
No, but if you have $50,000 in the bank, you have FDIC insurance. If I've got 100.
They don't have the money to cover that. We can get into that discussion if you want, but the FDIC, they do not have. They would have to increase the supply in order to cover their insurance that they say they have. The governments are broke. Don't be to be the one to break the bad news, but they are so dangerously broke.
Well,
People will find that out here soon.
there are times when savings and loans have gone bankrupt over the last 4 years, and the SPIC and the FDIC have covered those losses. If you're going to say going forward, that's not going to happen. It's a different thing.
Well, 2008, they had to bail out the banks. They had to bail out AIG. If they didn't bail out AIG, then all insurance would have poof. So it's really, who do you trust? No insurance is 100% foolproof. Just what do you have more faith in?
What Doyle was saying is that because Bitcoin does not have the function of a store of value, because it fluctuates all the time. No, it doesn't.
Gold and silver does. Gold and silver does, but what do you compare $100 to?
What I'm saying is,
Because
interest rates go up and down.
Bitcoin
No,
doesn't
no,
fluctuate.
no,
One Bitcoin
what
will always
I'm
equal one
saying
Bitcoin.
is that Bitcoins are like a 401k or any other investment.
I would look at it more like a
that your principal is at risk. It
Sure.
could go up, it could go down.
That's with any
Right.
investment, yeah.
Okay? What I'm saying is that money, dollars, currency, and while inflation or interest rates and all those other things, the fact is $100 is $100, building on what you were saying. Right?
One Bitcoin is also one Bitcoin.
Yes, but that Bitcoin can fluctuate not just based off of economic conditions, but also supply and demand issues within there. Okay? It doesn't matter how much is out there of $100. It's still $100.
Yes, it does. Go buy groceries.
No,
Go
it
buy
doesn't.
groceries 50 years ago. See how much it cost
That's
you to buy groceries.
inflation.
Yes.
Well, that's,
What does that do?
That's an
That's
economic
a
steady reevaluation.
Like the basic one. Yeah, but
Yeah.
Bitcoin was $2,200 4 months ago.
It
and
was
now it's
$400 5 years
You
ago.
know. So
Yeah, now it's 4,800 because there's a limited supply while the other supply of the dollar
Right.
keeps
Okay.
increasing.
Right, and you're actually comparing it to the dollar. Say in 20 years in the future, or 40 years in the future, the dollar doesn't even exist anymore. Now you only have Bitcoin. You can't necessarily compare a currency to a currency that might not exist. Like, we don't do bartering anymore, or that much.
Exactly.
Right?
And in that case, one Bitcoin would still equal one Bitcoin throughout the time. Same with 1 ounce of gold equaling 1 ounce of gold. And to be honest, it's a central banking trick. If they actually cared about you, they'd still store gold and silver in their banks, but they don't do that anymore. That's why you see banks look more like retail stores than really big, monumental places that store precious things.
I have a Bitcoin, and I really want dollars because I want to buy something except Bitcoin. How do I get $2,000 from it?
Well, there's a lot of different ways you can do it. You can get a Bitcoin debit card. That's what I have. So using that, it'll just automatically transfer the Bitcoin to dollars. That's probably the easiest way. You can also withdraw from the ATM like that. You can find somebody to sell your Bitcoin to for dollars. That is obviously increasing. But really, I would just get either the card or deal with your own bank. Coinbase is great for that. You can sell Bitcoin and it'll directly deposit into your bank.
So I can go to my bank and get a Bitcoin debit card?
It wouldn't be through your bank. It'd be through
Nice.
Coinbase.
I go through like one of these exchanges.
Eventually, nice. Not yet.
Exchange to do that?
Yeah, Coinbase is the biggest exchange, I would say, in the world right now. And the card you're looking for is Shift card. They do the transactions, and they offer really low fees. I think it's like 0% transaction fees if you do it in state.
This is the debit card.
There you go.
Chip or is it flag?
Chip.
Oh, it's got a chip.
Mine was Slide.
So just to clarify, I think this is what the discussion over here really was about. So we can, so basically, how gold standard, gold can get more valuable in dollars, but you still have the gold no matter what the economy fluctuates to. You can still sell it for whatever value is there, and everything conforms to what the dollar value is.
Everything, well, it depends who you talk to. I would say everything conforms to the gold and silver price, not the dollar. I think the dollar is more to rig the gold and silver price.
Oh, no, okay, yeah. Keep in mind, I just graduated high school, so I'm still learning this economic stuff.
Oh, no.
They don't teach me about this.
No worries, yeah, they don't.
Yeah.
They do it for a reason.
So kind of like gold. So one day if gold's $1, I can go sell for $1. If it's $5, I can sell for $5. So that's the same way with Bitcoin, but it's just kind of removing the hassle. I go and sell gold and just sell the Bitcoin from my phone.
Yeah, but I mean, it depends what you sell for. Things fluctuate in price all the time. That's just pure free markets and supply and demand. But yeah, I mean, it can fluctuate. And one more note, in our Constitution, Article 1, Section 10, it literally specifically states that only gold and silver are money. Everything else is not money, like if you actually look at our Constitution.
Well, yeah, it's all federal receipts. It's just receipts of banknotes of gold.
Yeah.
So.
And we can't get into why they did it, but I do agree with some of the reasons why they did it. So not everything seems so black and white, but we do need to go back to a gold standard here soon.
Yeah. And Bitcoin is somewhat that new gold standard in a way?
Yeah, in a way. I think Bitcoin is going to be like the new fiat currency because it can't be inflated. And it's more a currency than money. I would define money as something that you can't lose. If electricity went out tomorrow and the internet collapsed or whatever, Bitcoin would be gone, your gold and silver would. That's why, even though I'm a huge advocate of Bitcoin and Ethereum and stuff, gold and silver will always be money.
So as long as North Korea doesn't mess with an EMP or Terminator takes over the world, we should be good to go.
Yeah, exactly. And if those things happen, then it doesn't matter.
Right.
Way bigger issue.
EMP wouldn't matter there either because it's all over the world, right?
Yeah.
Even if you wiped out every computer in the United States, there's still the ones in Europe and China and
Yeah.
right.
Go get our money back from Switzerland.
Yeah. I mean, that's the cool thing, though. As long as one computer saves this blockchain, everybody still has their Bitcoin.
You had said that China is doing a tremendous amount of Bitcoin mining.
Mm-hmm.
So hold that up and compare it to the fact that China's government just came out and said that they're not accepting Bitcoin or not allowing?
It's all
What-
fraud, smoke and mirrors.
What's going on?
They're trying to manipulate the price to get the better hand. Because I trade Bitcoin, and when that stuff happens, it dips. So imagine I'm a government, and I want to short the market and make money. If I short the market, then come out with that announcement, I'll make money off that dip. It's basically
Is that what they did?
Yeah.
Are you saying the government did that?
Oh yeah, China is they deliver. Well, that can't be proven, but that's what I would bet. I would bet a lot of money
Majority
that you
people in your position say that that was a deliberate attempt
Yes.
by the Chinese government to manipulate the Bitcoin value.
Yes, they're not the only government that does that too. We do.
Government lines is one thing.
Come on.
You know.
Yeah.
Why do you
Right.
think all the currencies, they do have to keep those lower so for imports, and exports are lower than imports?
Is that what Jamie Dimon did?
Yeah, that's what he did too. And here's another story. I'll just go and say this. During World War II, and when they attacked Pearl Harbor, they took out all the gold and silver to replace it with fiat currencies so that if they ever got invaded, they couldn't take the gold and silver. So sometimes there are reasons that the government does things, and I can't declassify everything, but right now everybody should want a gold and silver standard because what they're doing right now is highly corrupt.
In Hawaii, they actually came out with a currency just for Hawaii, so that even if they took over the banks over the island, the money would be useless because it was unified as only, even the paper money was in value, would have been in value.
Yeah.
For the same reason.
And then this also goes into things. I mean, gold has always been used predominantly for warfare. Because even if you're, and you can look back in the World War I and World War II, gold was the winners of those wars. I mean, sure, you could argue World War II was also intelligence and stuff like that. But dominantly, if you have gold and silver, you will have more power than anybody else who doesn't. So that's the only point I want to make there. But I guess we'll go on with this. Proof of work, proof of stake. So these are two different mining algorithms that are coming out right now. Proof of work is what Bitcoin has. That's guessing the big numbers and verifying it in the blockchain. Proof of stake, that basically makes it so that people stake their Bitcoins like, I will not spend my, it's not with Bitcoin, it's with other currencies, but I'm just using Bitcoin as an example. I will put 10 Bitcoin on the blockchain saying I will not move it for a week or so. So then, based off of me not moving my Bitcoin, they can basically look at all the other people who did and verify the blockchain that way. Am I doing that? More or less. I'm trying to make it really simple. So that's basically how proof of stake works. It works by staking your coins and saying you won't spend them and then you'll store them on the blockchain for a period of time.
Is there a reward for that?
Yes. That's like how they get miners, and one of the things with proof of stake that they say is like so much better is that it doesn't require all these massive amount of computers to verify these transactions, but that also makes it less secure. That's why Bitcoin's proof of work and will always remain proof of work because it is theoretically the most secure.
So it's just big interest. It's like in your bank for money and you just drugs.
Yeah, and you say it's like a CD or a bond, basically. Saying, hey, I won't spend it for this much, and I get a so-and-so interest rate back. Here's all the different companies within the space. You can see there's exchanges, brokerages, soft wallets and hard wallets. These are where you store your private keys. Ledger Wallet is one company that I would recommend if you want a hardware wallet that is pretty cheap and that's very secure so that even if your computer did get corrupted, you could still store it on this one like USB flash drive and it would stay put. Then there's like investment companies, money services, capital markets, Symbiote, and some of these others are going to be the first ones, well, besides me, to replicate Wall Street and bring stocks on blockchain so that you can basically trade stocks just like you could Bitcoin. And trading, ATMs, payroll, compliance. I mean, there's a lot of cool different features that you can do with Bitcoin since it's electronic. One example is BitJobs. BitJobs, you can take a screenshot of somebody's screen who's a coder for you or doing photo editing or whatever. you can take a screenshot every 5 minutes and then pay them automatically using Bitcoin every hour or whatever you have set up on the website. So it's a way to completely automate basically the managerial process. Yeah, I guess that's everything.
What about all these other little coins that are popping up?
Most are not good. Like, most are just there to make money and to take Bitcoin. Bitcoin is the gold standard as far as cryptocurrencies are concerned. All these others don't really have that great of an application, and if they do have an application, it can be replicated either using Bitcoin or Ethereum. But it's all really niche markets because some blockchains operate faster, some blockchains do specific things. It really matters what you're trying to achieve. And then this is public versus private blockchains. Public basically means it's open source. Anybody can join the network. You can open, read, write, all that. It's slower because it's public, and you have to have some security like proof of work, proof of stake, and it's somewhat anonymous, pseudo-anonymous. As long as you don't give your Bitcoin wallet address, nobody can really tell it's you. And then assets, native assets. Private, that's when people use the blockchain technology to create their own servers, basically, in a way. It's like with the 700 servers you deal with, you probably want to use a private blockchain. Yeah, or whatever. A lot of servers. So basically, it's a way to privately get all these computers on one ledger, but it's not open to the public. So therefore, you don't need to have the security that you do with proof of work and proof of stake because you pre-approve the applicants, which makes it faster. But you got to think it's also private. So you're trusting that private entity with whatever they do. And this is just some coin market caps. Bitcoin's obviously the top, Ethereum second. These two are the biggest ones. The rest, to be honest, I wouldn't even bother investing in. I would just get Bitcoin and Ethereum because Bitcoin's like the digital gold. So after there's a digital gold for cryptocurrencies, you don't really need any other cryptocurrency for a monetary transaction. And Ethereum handles the smart contracts that are Turing complete. So that would be the only other thing you would need a blockchain for other than a monetary transaction.
Can those people switch over to Bitcoin? Like, just like, they're like, oh, well, I was stupid, I invested in a bad cryptocurrency. Can they like use that cryptocurrency to get as much Bitcoin?
Yeah.
Okay.
That's what the altcoins are doing right now. That's what like all these, there's like hundreds.
Everybody's just like switching over to Bitcoin?
Yeah, and I mean, I'm not saying like all the projects are fraudulent, but I'm just saying a lot of those projects will not exist in the future.
Yeah, because,
We got another group coming in. If y'all want to talk to them,